Welcome to the MUFG Global Markets Asia podcast. I'm Michael Wan, Senior Currency Analyst with the Global Markets Research Team. And I'm joined today by Japinder Singh, Vice President, Treasury Sales from MUFG India. Today is 7th of August 2024. The following podcast is for informational purposes only. It is intended for professional investors and eligible counterparties and not for retail clients. Any content should not be regarded as an offer to conduct investment businesses or investment recommendations.
Good morning, Michael. How are you today?
Hi, good morning, Japinder. I'm good, thank you.
Perhaps it's perfect time to connect as there is a lot to unpack. We had big last week key highlights being Fed and BOJ policy meets and rising US unemployment rate. So to start with, I will want to understand your expectations from RBI policy meet this week, given Fed has clearly signaled a September cut.
Yeah. So certainly, as you mentioned, it's been extremely volatile week, both this week and last week. Certainly the Bank of Japan and Fed policy meetings have been quite seminal last week. But on top of that, you have the sharp market volatility this week with the Nikkei down more than 12% on Monday, the largest one-day move since 1987. So I think in that broader global market context, I think RBI, as you mentioned, will be meeting this week. And certainly, I think from India's perspective, I would say that the macro fundamentals are still very strong and very sound. And as such, I don't think that RBI necessarily has to do anything per se, in the sense that RBI can still move according to its own domestic fundamentals in terms of rate decisions. And ultimately, I think from the communications from RBI and other things, it does sound like RBI will, number one, keep policy rates on hold, and I think also keep its policy stance unchanged in this meeting. Our call is that RBI will start to cut rates from the first quarter of 2025 calendar year. And part of that is to do with the uncertainty regards to the monsoon, when inflation will start to come off more sustainably towards the 4 to 4.5% range that they're looking at. And I think more broadly, the domestic fundamentals of the economy are still strong, with growth still holding up very well. And so I think that RBI will want to keep some optionality down the road. Just two things to highlight. I think we'll also look at in terms of the vote from the Monetary Policy Committee. And in the last meeting, there were 2 external members who dissented. So I think that that will still be the case. So 2 dissent out of 6 monetary policy members dissenting in terms of a rate cut. And I think the other key thing is that there was quite an important RBI working paper that was released a couple of weeks back, highlighting the long-term neutral rate of the RBI is now roughly like 1.4 to 1.9%. So in other words, if inflation trends towards the 4 to 4.5% range, the long-term neutral rate, it's probably closer to about 6%, which is as we expect in our forecast. So I think bottom line, it's RBI in terms of its rates, it's likely a shallow rate cut cycle. And I think in this meeting, they'll probably communicate a still data-dependent stance.
Okay, so considering USD INR is currently at all-time highs, what is your forecast for the pair? And can you please elaborate on factors shaping your projection?
Yeah, so certainly dollar INR has touched its all-time highs, closer to the 84 handle as we speak. And RBI has certainly been an important player in this regard by intervening in the FX market by selling dollars to prevent dollar rupee from spiking further. And I think the really interesting part this time is that dollar rupee has been also moving in a different direction from the broader dollar index, in that the dollar has been weakening somewhat over the past month, and dollar rupee has been rising with the rupee weakening.
And I think there are a couple of things that are affecting the pair right now, some of which are global. And I think one important element is the unwind of global carry trades, including on the Mexican peso, on the Brazilian real, And that's also fed into the strength in the Japanese yen, and also some of the reversal in equity markets globally as well. The weakness is in risk sentiment globally has also fed into some slight weakness in domestic equity sentiment in terms of the Sensex, and you're seeing some small but manageable foreign outflows from the foreign equity market right now. So, with all these factors in mind, my base case scenario for dollar INR is that it trends down gradually over time to around the 83 kind of handle by the second quarter of next year, calendar year. And the key reason is that we still do see very strong expected capital inflows, including from bond index inclusion. We do expect FDI to pick up over the medium term. And we do expect, in terms of equity inflows, to continue to be strong over the next 6 to 12 months, in part because there's a very strong pipeline of equity IPOs that's upcoming. I think the slight negative factor is in terms of the current account deficit. And over here, we are forecasting roughly 1.4% of GDP in terms of the import needs and current account deficit for India. Slightly higher than before, but overall, given the fact that oil prices right now are very low, at below $80 per barrel, I think the balance of risk still tilt towards dollar INR coming down over time, towards the 83 handle.
Nonetheless, while I've laid out my base case scenario for dollar INR in terms of the fundamentals, I think we have to be very watchful for risk as well, given the momentum that we're seeing in dollar INR spiking towards the 84 level. And I think where we could be wrong is if the global carry trade unwind continues at the same pace as we've seen, especially over the past 2 weeks, which could spill over into a currency such as the Indian rupee, which has been quite a popular carry trade among other currencies. And I think the other sort of risk factor to watch out for is to see if domestically the current account deficit widens to say 1.5% to 2% of GDP, which is not our base case. And especially given the fact that oil prices are still relatively low right now, and should over time imply that the import pressures remain quite well contained moving forward.
Thanks for your detailed insights, Michael. Next, I would like to focus on yen rupee, which has seen significant movement of nearly 15% over past month, and it seems stars are aligned for stronger JPY only. Can you please take us through your projection for the pair and expectation from BOJ in the forthcoming policy meetings?
Yeah, sure. So certainly dollar yen has been extremely volatile over the past couple of months. And it's gone from a high of 160 down closer to about 145 kind of handle as we speak. And there are a couple of factors driving the volatility in yen. Not least was the Bank of Japan policy meeting last week, where the Bank of Japan was hawkish. And among other things, it not only just hiked its policy rate, but also communicated the path towards hiking rates further. If and when its economic forecasts are realized in the future. So it's quite a hawkish statement and quite a hawkish stance by the Bank of Japan. And I think that together with other factors such as the global risk of sentiment, coupled with the global unwind of carry trades, of which yen it's a very popular funding currency, have all combined to make the stars align for a stronger yen moving forward. So our official forecast for dollar yen is 144 by the middle of next year. But certainly with the volatility in the currency, it's already moved quite a bit, and we have to probably look at it closer again more officially. But our general message is that the factors are still aligning for a stronger yen in terms of the general direction. In terms of dollar rupee, we're calling for some appreciation against the dollar, but probably not as much as the yen. So net in terms of the net impact to the Japanese yen versus the Indian rupee, I think it should trend up gradually over time from current levels, but probably not as fast as what you've seen over the past 1 month or so.
Thanks, Michael, for your time today. It was great to hear your views in these volatile markets. We'll connect with you again soon.
Thank you.
Thank you for listening to the MUFG Global Markets Asia podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you subscribe to your podcasts. Contact your MUFG sales representative for more information. Check back again for more insights from the Global Markets Research team.